Hey, tax friends. It's Lloydetta, your trusted financial partner and licensed enrolled agent, which is the highest credential awarded to me by the IRS that allows me to represent you before the IRS for all tax matters. I wanted to stop in today and give you just a few tax tips. We're going to talk about how a change in your marital status can affect your tax filing. This is an important one, so I want to make sure that you are aware of it. A change in a couple's marital status, such as a separation or divorce, it affects their tax situation. So the IRS considers a couple married for tax filing purposes until they get a final degree of divorce or a separate maintenance, which means they're just separated. The One of the most important things you want to make sure you do during this time is update your tax withholding. When a taxpayer divorces or separates, a new Form W-4, which is called the Employer's Withholding Certificate, should be provided to the employer. This is an important form, and usually people fill this out when they get a new job. It's important to make sure this form is updated ongoing. Additionally, I suggest that you make a copy of this form when you submit it for changes and keep a copy for yourself. So, if you receive alimony, you may have to make estimated tax payments. Taxpayers can figure out if they're withholding the correct amount with the tax withholding estimator, and this is a tool that the IRS has available on their website. If you need to reach out to your tax professional for assistance with that, it's a good idea to do so. And if you don't have one, you can reach out to us. Rules related to the dependent children and support. Generally, the parent with custody of a child can claim them on their tax return. If parents split custody 50-50 and they aren't filing a joint return, they'll have to decide who claims the child. If the parents can agree, they should refer to the tiebreaker rules. And if you need help with this, again, I suggest you reach out to your tax professional. And if you don't have one, you can reach out to us. A bonus tip, friends. Child support payments are never deductible by the person paying it and never taxable by the person receiving it. Additionally, if a divorce decree or separation instrument provides for alimony and child support at the same time, then the spouse that is responsible for paying it will pay less than the total required. And this is because that payment is going to apply to child support first. So only the remaining amount will be considered alimony. A bonus tip, friends. If you pay alimony, you can no longer deduct it from your taxable income. And if you're the recipient, you can no longer have to add it as taxable income. So that kind of works on both parts for the person paying it and for the person receiving it. This change was made originally in 2017 when we had the TCJA, which is the Tax Cut and Jobs Act. This will expire in 2025. However, this will remain the same. There's no changes to it. So that'll be an ongoing rule. And again, I wanted to stop in just to give you an update, give you some tax tips, make sure you're aware, and just keep you posted as to what's going on in the tax world. I'm Lloydetta. Stay tuned for more tips like this. And if you need more information about who we are, how to get in touch, please visit our website. There's links in the description and in our bio. And we look forward to serving you. Thanks, friends.